Welcome to Trading Lounge and the US Indices. I'm just going to cover the SP 500 and I'm also going to start making videos for stocks in the US and Australia. I won't cover the NASDAQ. I don't think many people trade that. And of course, you know, it's pretty much the same patterns for the S&P, the DJ and the NASDAQ, and the Russell can be a bit different, but that's my plan. I want to start on the hourly chart here, because what we've been doing is just counting 5 waves to the upside here. So we're pretty close to the 5 waves here. So one of the main points here is that we've either got these 5 waves here as wave 1, and we'll come back as an ABC for wave 2 here, and then we'll push higher from this point. The other point here is that we can have a top in play here. And that means that the end of this little structure can be the top, and we can actually come straight down from that point. So we need to be a little bit mindful and have a few tactics here. The other point here too is that if we do drift higher from here, then what we can do is we use the trading levels. This 2,800 here is what we call minor trading level 8. And then we have, from down here, we have 1, 2, and 3, which is group 1. So we can grab that now, and we can put group 1 here, which will also be 1, 2, and 3. And of course, group 2 here is the other end here, where we've got 65, 72, and 80. And of course, we've got the midpoint here at 50 here. So the normal process is that if we find a nice support on top of group 1 here, Sub Group 1, then we're going to be going higher from there. Now, in terms of, because I want to talk about, if we've made a mistake here, then we need to, know where we've made it. And we also need to be on the right side at the right time. So if we take this level here, the 2830 here, the top of group 1, we'll have the arrival, which we've got now, and then normally we come back for the reaction. Now the reaction normally comes back to 2. It can come sometimes down to 1.5 or 2815 or 15, and then push up from there. In this case, it's just dropped below 2. So normally, if the market's going to move higher, we would have a move up through to here. Now, once we've got that move here, it comes above the 30, then we would see an A wave, a B wave, and a C wave coming down through to here. And once again, that high point here, that becomes our reference point to go long again. And so does this one here. So if the market does push up through here, then we go long again, because we don't want to fight the trend. We want to surf those waves. So that's what we'll do. So in this case here, it's possible for this just to move up here and drop back down here. We'll have a look at that in a moment. But if it moves up through here, and then creates the first high above the level, it's not that we should trade it or chase it or anything, because it will fold back here. And once it folds back here, then we can use one of these as a reference point to go long again, because these markets can just keep climbing as well. We need to be mindful of that. So the Elliott Wave is important, but the trade setups are just as important, or if not more important. Because the good thing about Elliott Wave is, yes, you can just trade it as an indicator as itself, but we don't always get it right. So if we use support and resistance, and that's why the trading levels were developed to draw the line in the sand to strengthen the Elliott Wave, because the Elliott Wave is good for the direction. If we get 5 waves, that means we're going to get another 5 waves after a correction. So it's helpful in attaining the direction for the market. But to trade it just by itself, it's very difficult, actually. The trading levels make it easier for me, because it gives me a setup and it makes me understand it. To trade Elliott Wave just purely by itself, there's not many people that can do it consistently. And funny enough, or not funny, it's through my history, I've noticed a few women can do it, but not men so much. So there's one for the girls. Yeah, look, coming back to this here, finding support on this setup, this is what you've got to be looking for here. We may have a top in here, or we may have one more new high in here. So if I go to the tick chart here, we've been counting these 5 waves as 1 and 2 and 3 here and 4 here, and we did go long through here somewhere, and that's okay. None of these little waves really make much sense to me here. This one looks like it's in 3 and 5 here, so this wave 4 could be in this little space here, and if that's the case, then this would be wave 1 and 2 here. And so on. So we can push higher through here. It does appear that we can have 5 waves down through to here. I'll just check on that for a moment. Let's just check that. So this is going from 100 ticks down to 20 ticks. So we've got it's pretty much the strongest in the middle here. So we can go from here, we go 1 and 2 and 3 and 4 and 5 here. So that's the 3rd wave to here. So that would make this wave 1 and 2 and 3, and probably it looks like 5 waves here, so an A and a B and a C here for 4 down. So we can have 5 waves here, which would make this here 1, 2, 3, 4, 5 here for an A wave, B wave, and 1, 2, 3, 4, and 5 for a C wave here. It could turn into 5 waves here, but we've got 3 waves back up here at this stage, so that would be getting into the 50-60% retracement level. Yeah, so there's still another, it can make another little move up into this space here. So we could say that 26, so we're going, because these are sub levels from 20 to 30 here, the next levels down are micro levels. So I know that we've got a micro group 2 in here. So yeah, into this little space here. So because we got 5 and then we got 8, so we got 1, 2, 3, the Fibonacci numbers, then 5, then 8. So I know that this is coming into the group 2 area here. So this is where the resistance is really, resistance is going to be right here for this market. So yeah, we can expect resistance. So if it fails from here, it will come back down, and then we've got to look at if we take this low here and take that high here, then we can see the market coming back down to this level here. So realistically, we've got a couple of things here just with this. I'll just put these in and we can clean it up a bit then. Clean that one up and that one up. So the market can, I can't draw on this side of the tick chart, so it makes it a bit difficult, but the market can move up to here and fail. Even if it moved to here, then it can have its ABC correction back down to here. So we could say that we could short the market under 28.20 here, but we would want it as a retested resistance. I'll just come over to here. So the market would come down, it would bounce off here, and then it would move through here, and then it would come back and retest it. It's this retest, same as here as well. So this is dropped through here, so that becomes the catalyst here for the trigger, and if that retest fails, which should be on lower volume if you're trading futures contracts, that should be on lower volume, and then if that's on lower volume moving back up there, then you'll know that it's going to fail here. If it's on increased volume here, then you know that it's going to continue to the upside. So yeah, we need that and that. So that would create the short trade over here for that. Okay, I'm just going to clean this up while I'm here, because I won't come back here. I'll remove that. So we're aware of that. I'll just sort of come back to the 100 ticks. So we're long at the moment on these on the hourly chart. So hopefully that I mean, if I'm scalping, I trade up to number 3, I get out, and then I wait for the setup here. So we've either got this in play here at the moment, or we've got one more move to go over here for this. What's a daisy? Let's go back to the hourly chart here. Let's just borrow this here, copy this. So that long trade is over there. If you're long already, then we need to I've got some guys working on the accounting program, and what I'm going to do is I'm going to put these trades into the accounting program, but it's not for a while yet. We've still got a lot of other work to do first, but so eventually these trades won't be on this charting program. They'll on this charting program. They'll be kept in our accounting program. So this is not only a stop here, this would also be, if I can just, that will keep that to break even if you haven't gotten out here, but you should be out on the Friday. Too much happens over the weekend for short-term trading. So if I copy that and also put that there as well, okay? So that will create the short trade, that will create the long trade here, okay? So I want to save that. So we can just drill back out now and have a look at the different counts that I've got for all of these markets. So the 4-hour chart here. So what we were talking about just then is that the move up here can either be, we're looking for a top here, it come back as an ABC here for wave 2 here, and then move up from that point, or it's just going to come straight down from that point. So we'll have time to work that. So we'll be working this area through here. We may get a small position in here and look to add to that if it's going to move down lower from that point. So we need to work that side of the market at that stage. So yeah, we can have a top in here for this. If otherwise, we'll just continue to move to the upside in terms of 1 and 2 and 3 and 4 and 5 up here for those guys, and take us up into the 3,000 area there. So just coming to these hourly charts here. So, oopsie daisy, just sorry about that. Oh, it's jumping around a bit. I wonder why it's doing that. That's strange. It was not. Oh, I'm sorry about that. It's not jumping out. Give me a chance. No, there's something weird going on with the charting program. I haven't seen that before, but I'm just going to leave it at that then, because I'll probably have to close the program down and restart it at that point. So anyway, there we are for the S&P. Alrighty, thanks for tuning in. Cheers.